everyone. Thank you for joining us today. You have your team at Bohr Insurance Group over here ready to get things rolling. This is going to be led by your insurance twins, Derek and Brian Bohr. We have some of our colleagues on the call with us as well. So thank you for joining us all. We are all very glad to have you. And like you know, the content of today's workshop is going to be all about rental properties, investment properties, tenant properties, call it what you like. The point is, it is about a property that you own that is rented to others for the purposes of generating cash flow. So we're going to dive into the most common insurance topics that we address when we're looking at a rental property, as well as some of the most common questions that we field from clients when determining how to best set up and structure the coverage, what to expect in the event of a claim, and then how those properties tend to actually be owned. So Derek is going to tag along with me. We will get things rolling. As a reminder, like you're probably aware, we do record these workshops for educational purposes and for distribution to clients as things come up and as they'd like to dive back into the specifics. With that being said, we do welcome your questions and your comments as we are working our way through here. Like you know, we will have a section at the end for questions and answers where we are more than happy to hang around and talk specifics, circle back to anything we touched on and get into the weeds. But if we're touching on something here that triggers a question or you'd like us to dive in somewhere, please, of course, mute yourself and speak up or use the chat feature within Zoom to bring up your question. We are happy to answer it and address it as we work our way through here.
Right on. And Brian, as your pesky younger brother by a minute, I think that I should point out here that, yes, this is about rental properties, but that's really just what we refer to these types of homes. In reality, it's any home that is not owner occupied. So if you own the home and you have a child that lives in it, or you have another family member, a cousin or a coworker or someone like that that's living in that home, maybe you're not charging them rent, but for all intents and purposes, that is a rental home with regard to insurance. So keep in mind through here that, yes, we're going to be referring to these as rental homes, but in reality, it's simply a home that is not occupied by the owner of it.
That's a great point, Derek. Thanks for bringing that up. They say younger brothers are worthless, and there you go, bringing some value to the conversation already.
Only took me 34 years.
That's right. Well, you're there. I appreciate it. All right, let's dive in. A quick look at the agenda for today. And again, we're going to keep this to 25 minutes sharp, as we always do. Part one, we're going to talk about valuing your property for insurance purposes. Part two, what is covered when something goes wrong? Part three, what else do we need to keep in mind when we own a rental property? So part one, let's dive into the biggie, Derek. Part one is about the coverage evaluation, or how much coverage are we going to have on our policy? How is that coverage determined? And what choices am I making here? There are really two parts or two styles of coverage that you'll find on an insurance policy. Tell us what you see here. What's most popular?
Yeah, well, and I think it's important to point out that there's some flexibility with rental properties from an insurance standpoint. Most times when you have your classic owner-occupied home that most of us have, that homeowner's policy doesn't have a ton of options. When you've got a rental property, you've got certain options with regard to what you want covered, how you want those claims to be paid out, the coverage amount you want to use on the policy, et cetera, et cetera. So one of those big decisions to make is, what coverage amount do I want in that policy? You can choose two different things. Number one, the column on the left here is replacement cost coverage. That's the most popular option, and that looks a lot like your classic homeowner's insurance policy. If there is a claim on that policy, that claim is going to be paid based on the cost to repair the home or entirely rebuild it if it's completely destroyed. There's no deduction for depreciation. So the insurance policy doesn't care if that home is 5 years old or 50 years old or 100 years old. When there is damage to it, it's going to pay whatever it takes to make repairs to it with brand new material or rebuild that thing from scratch.
So what's my out-of-pocket expense on a claim like that if I have replacement cost coverage?
At the end of the day, your out-of-pocket expense is your homeowner's policy deductible or your rental property's deductible in this instance, because the insurance policy is going to pay whatever it costs to repair or completely rebuild your home.
Okay, great.
And as you know, Brian, there is another option, and that's the actual cash value option. This one's a little bit more complicated. So, Brian, as the older brother, I'll kick that to you to have fun explaining.
Yeah, that's great. Yeah, thanks. Actual cash value coverage. It starts with the baseline of replacement cost coverage. But in the event of a claim, that policy specifically says we are going to deduct depreciation when calculating our claim payment. The easiest way to look at how this style of coverage plays out is the classic roof claim. I've got a roof on my rental property. My roof was destroyed by a hailstorm. Seen it happen. That roof was 10 years old. I put it on in 2011, and it was a 20 to 30-year roof. Well, the replacement cost value of that roof is $15,000 because that's what it would cost to have someone come out and replace that roof today. But when I file my claim, if I have actual cash value coverage, my claim is going to pay out more like $9,000, $10,000, maybe $11,000 because they're going to take replacement cost of $15,000 less the depreciation that is on that roof and then calculate the claim based on that. The important part to understand with actual cash value coverage is on top of my deductible, I need to understand that I have to have a sinking fund or I have to have cash set aside for some of these types of claims because the insurance company is not going to pay the full cost of replacing that damaged roof. They're going to pay the cost of replacing the roof less the amount of deduction, the deduction for depreciation that there was already on that roof before it was destroyed.
So, Brian, if that roof, let's say it was a 30-year shingle that was used on that roof, and that roof has needed to be replaced for years, it's in year 35 of its lifespan, is there any insurance value to that roof if you have actual cash value coverage?
Not really, because it's fully depreciated at that point. You're going to take replacement cost minus a fully depreciated roof, and you're going to end up with zero.
So Is it safe to say that if my home was completed yesterday, I built it from scratch, I'm going to rent it out to tenants, and it just got done being built yesterday, the actual cash value and the replacement cost are going to be identical because there's no depreciation from just that one day of existence. But as that house ages, a year, 10 years, 100 years down the road, I'm going to have this big discrepancy that continues to grow between the replacement cost and the actual cash value. Is that right?
Absolutely. Yep. Okay. Yep. That brand new home, it hasn't depreciated at all. So your actual cash value of that home is going to exactly equal the replacement cost. Why don't you give us a quick look at this example, Derek, in terms of the difference between replacement cost of a property and the actual cash value of a property. In this scenario here, you might have a very, very similar market value of each of these properties or similar actual cash value of them, but replacement cost is probably going to be wildly different, right? Yeah. Tell us what we're seeing here.
Yeah, well, on the left, it looks like we've got a pretty small cabin, but it looks fairly new. So there's going to be a very small difference between the replacement cost and the actual cash value. Now on the right, you've got a very, very large Victorian style home that has a very, very high replacement cost because if that thing burnt to the ground, the insurance company has to rebuild it to its exact specifications. That thing's going to probably cost $1.5 to $2 million to rebuild. But what's the actual cash value of it? Well, it looks like it's almost fully depreciated. It almost looks like it's unlivable. So the actual cash value is next to nothing, but the replacement cost is enormous. So you've got a huge discrepancy there, which we see in certain instances on homes that are in the older areas of West Michigan.
So if I have that home on the right, if I choose replacement cost coverage, I might have 1.5 or $2 million of coverage on my insurance policy. If I choose actual cash value coverage, I might only have 50 or 100,000 of coverage on that policy, correct?
Yeah, you have quite a predicament because, what's that home worth? Maybe $100,000, and you're going to insure it for $1.5 to $2 million because you want replacement cost coverage? Well, that's going to be pretty expensive to do that. Or you choose the actual cash value coverage, but God forbid there's a fire in that thing, you're going to get a depreciated claim payment that's going to be next to nothing. So you have a really tough decision to make in that instance.
Sure. Yeah. Yeah. Very important consideration to keep in mind when looking and assessing uh, investment properties. So the key point here is obviously that insurance coverage is concerned with the structure of the home. In the example that we looked at here, this nice cabin is on beautiful lakefront. Well, that land isn't going anywhere. Just like in your home insurance policy, the insurance policy is not concerned with the value of the land. They are insuring the structure of the home, the cost to rebuild or to repair the structure of that home. So, from a location standpoint, it doesn't make any difference on the insurance policy in terms of that coverage figure. So, Derek, certain people who own investment properties are very informed about how these coverage differences play out, and they're tempted or they do choose actual cash value coverage for their investment properties, which is perfectly appropriate so long as they understand how they need to manage the cash flow and the future plans for that investment property. One key point that we always bring up is that anyone with actual cash value coverage needs to set up a sinking fund to account for the fact that in the event of one of these partial claims, they're going to have to be chipping in toward those claim costs. For example, here you've got the roof that's destroyed or beat up. Just like my example earlier, if this coverage is on actual cash value, me as the owner of this investment property, I'm going to be chipping in towards some of those expenses because my insurance policy is only going to pay a certain percentage of the cost of replacing that damaged roof. Correct?
Correct. And that's why if you have a mortgage on your rental property, the mortgage company is going to require in 99.9% of instances replacement cost coverage because they don't want to have to wonder if that, roof that's going to cost $20,000 to replace, but it's 30 years old, so there's not going to be any actual claim payment when it gets destroyed. They don't want to have to take that risk of you not having the 30 grand to replace the roof, and now they've got a home that's dilapidated and it's going to sustain more and more damage because it's unrepaired. So if you do have a mortgage on the property, in most instances, you're going to be required to choose the replacement cost coverage.
Sure. Got it. Thanks. And not to get too deep into the weeds, I know, us insurance nerds, we like to really nerd out on this stuff, but for claim example purposes, this slide is simply showing how that claim calculation or how that claim payment is determined. They're actually calculating the depreciation on each part of the damaged property, totaling the depreciation, and deducting that when coming to the total actual cash value claim payment. So all this is illustrating is how detailed that calculation becomes because they are accounting for depreciation when determining the claim payment. So like we said earlier, the tip here is to choose the coverage that's most appropriate for your rental property, also for your cash flow, and for your future intent of that property. Some landlords say, if I have a big claim and I get anything out of the insurance policy, I'm happy because I'm just totaling that home. I'm going to deploy my funds in a separate home. I'll sell the land that remains. That's great, so long as that works within your investment plan and within your cash flow for how you want to manage your investment properties. Other clients, they want to treat it like a home. If there's a claim, I want that paid. This is a nice home. I generate a lot of rental income because it's a nice home. Well, then maybe a replacement cost coverage is appropriate because you want that home to be in nice shape. You don't want to be chipping in 5, 6, 8, 10, 20 grand out of pocket to pay your share of a claim if it's not on replacement cost basis. So Derek, speaking of claims, give us a high level overview of what is typically going to be covered by an insurance policy on a rental property like we're talking.
Sure. So like I mentioned before, with a rental property, you have more options than you do with a typical owner-occupied policy. We talked about replacement cost coverage or actual cash value coverage. Now, the next decision to make is what types of things do I want covered by the policy? And there are 3 different options from least amount of coverage to most amount of coverage. You'll see on this tab from the left column all the way over to the right. The least amount of coverage is what's referred to as basic coverage. You'll see things that are covered there are your classic insurance claim examples: fire, lightning, smoke, wind, hail, those sorts of things. That's okay as long as you understand that in order for there to be a claim that's covered on that home, it's got to be something that is your typical insurance claim that people expect.
And it's very unusual to find that style of coverage on any sort of insurance policy these days, correct?
It is, but again, like you mentioned, it all depends on someone's budget and cash flow and the condition of the home as well, because underwriting does care about, the condition of the home and who's occupying it. And if they're a little bit nervous about what's going to happen, they might only offer basic coverage for that home. So a little bit of the decision-making process depends on the underwriting as well. But basic coverage, like you said, Brian, it's pretty unpopular because there are a lot of things that can go wrong. And if it's not covered, you've got a huge out-of-pocket expense to repair the home. The middle column here is broad form coverage. That's kind of the in-between between the two. It's going to cover the same stuff as the basic coverage, but it's also going to include things like a tree falls on the house. That's obviously going to be pretty expensive to repair the roof and the siding and haul that tree off of the property. Collapse due to weight of snow or ice. We've seen that happen with detached garages. And the biggest one, I think, is the water damage due to burst plumbing. Burst plumbing can be disastrous from a claim standpoint. I've seen a couple claims that have exceeded $50,000 when there was a burst pipe on the second floor of the home, and that happened to leak down through the entire home. Had to replace all the walls, the electrical, the insulation, the floors, the ceilings. It was a big mess. So that is a very important thing that is missing from the basic coverage, which is why most people, like Brian mentioned, are going to choose something broad form or the special form coverage, which you'll see in the column all the way to the right.
Now, before you touch on special form coverage, Derek, these first two, if I'm the owner of the home and I'm making the claim, it's my responsibility to show that what happened at my home is one of these covered type of events, correct? Because there's only coverage for these type of things that happen. So when I file my claim, I need to show a tree fell on my roof. There was a burst pipe. There was smoke damage in the kitchen, because it has to be one of these listed types of claims in order to be covered, right?
Correct. The onus is on the homeowner to say, this damage to my home is covered by the policy because what happened is specifically listed as a covered type of claim in the policy.
Okay, got it.
The coverage option on the far right, special form coverage, this is the cream of the crop. This one says, unless what happened to your home is explicitly excluded by the policy, it's covered. So it's going to cover the broad form coverage plus every single thing out there that could happen to the home, with exception of whatever's specifically excluded by the policy. So the example I like to use is we have an alien attack and they blow up your home with a plutonic ray gun. Well, that's going to be covered because the insurance company did not take the time to write alien attack, plutonic ray gun blowing up your home as a specific exclusion.
What about
Godzilla?
Policy. What about Godzilla walking through my neighborhood and smashing through my home?
Covered.
Okay.
So more likely types of things would be the ice dam, where ice backs up on the roof, lifts the shingles, causes interior water damage. Maybe a tenant left the windows open and there's a big rainstorm with a lot of wind and all the walls and the flooring get wet, and you've got to replace all of those components of the home. An instance listed here is, hey, not that many people have water beds these days, but someone had a water bed and it happened to spring a leak and it damages that wood floor beneath it and the ceiling underneath that. That's not going to be covered because the basic and the broad form coverages, they, in similar instance, they're not going to take the time to write this specific thing is covered in these types of things. Whereas on the special form thing, you're betting on the insurance company not taking the time to write these kind of one-off scenarios as an exclusion from the coverage.
Got it. That's very helpful. Thanks for that layout there, Derek. So we hit on the coverage value on my home. We hit on what is actually covered when something goes wrong. What else is there to keep in mind when owning an investment property? What if my property is owned by an LLC? We see that, of course, at the guidance of an attorney. They will advise often that an investment property should be owned via an LLC instead of being owned by me directly. What implications does that have? I've heard it can be a challenge. Is that true?
Yeah, it can be. I think a lot of times someone is doing that for asset protection. They're trying to bifurcate the ownership between themselves personally and this other entity via an LLC. So they're hoping that they've insulated themselves from the liability exposure of owning a rental property. In some instances that works, but most court rulings have showed that that LLC needs to be a legitimate LLC. It needs to have its own bank account. It needs to write the checks for the insurance premiums. It needs to really act like a true LLC. There are a lot of things that could go wrong to make it really ineffective with regard to lawsuit protection for the ownership of that rental home. Another big challenge is that if you have auto and homeowners and an umbrella policy set up, because all of those things are owned personally, well, if you own your rental home through an LLC, that's a different entity. That's not going to be covered by that umbrella policy that you've set up to protect yourself from lawsuits with regard to your vehicles, the ownership of your owner-occupied home, maybe your boat, your recreational vehicle, et cetera, et cetera. So another consideration there is if you put it in an LLC, it's not going to have coverage under your personal umbrella policy.
Interesting. Okay, very important points there. Now, what if I'm a concerned landlord? I'm worried about something going wrong at one of my investment properties, whether it's my tenant, it's their friend, it's the neighbor, something goes wrong. I've heard that my tenant could sue me. Is that true?
Yeah, absolutely. Absolutely. Just like anybody that comes onto property that you are responsible for maintaining, if they get hurt on that property, in all likelihood, you're going to be named in that lawsuit. So not only could your tenant sue you if they're hurt while occupying your home, but any of their guests could sue you as well, because even though that guest is occupying the home as the owner of the property, you are responsible for maintaining it in a safe and a reasonable manner. So, that's a big concern whenever you have tenants and guests that, are living in a home that could generate a huge lawsuit against you.
Interesting. Okay. And on that same note, a lot of insurance companies ask whether the tenants are allowed to have dogs at the property, which they're asking, of course, for the same purpose you just said. Something goes wrong and someone is hurt. Could that lawsuit, could that liability flow itself up to the owner of the property? It certainly could. So the advice from the insurance world would be have a strict policy for your tenants that stipulates what they can and what they cannot do to help protect yourself from something going wrong.
That's
what
right.
What can go wrong, Derek? It could be someone tripping off the deck. It could be your tenant's boyfriend or girlfriend falling down the stairs. It could even be your tenant that is injured if a smoke alarm doesn't respond in time, or something goes wrong at the property and your tenant, God forbid, is injured. Any of that, those are risks that any landlord takes by having someone else in their home. So is there coverage in the insurance policy for that type of thing? Yes, of course there is. Just like in your home insurance policy, you're likely going to see anywhere from $300,000 to $1 million of lawsuit protection in your typical rental insurance policy. Now, Derek stated earlier that the umbrella policy is very important. If your rental property is owned personally, your umbrella policy should be providing coverage over top of it. But like Derek said, if your investment property is owned by an LLC, your personal umbrella policy will not extend coverage over top, and you're going to be relying on whatever liability coverage you have in the insurance policy, plus hopefully the protection of that LLC.
And Brian, I think it's important to remember that lawyers like to go after whoever has the deepest pockets. So if your tenant's friend is hurt over on your property, maybe it was even an act of the tenant that hurt them, well, who are they going to really target in that lawsuit? You're the property owner. They assume that you've probably got deep pockets. They're going to go after you aggressively.
Right. Because, of course, if you own an investment property, you're the fat cat with all the money in the world.
You're a real estate mogul.
Yeah, real estate, right. Right. Most of us realize that that's not necessarily true just because you own a business or you own an investment property. But that's often what it looks like in the legal world. So we'll bring it home here with our expert tip that insurance is just one piece of the puzzle, just like your financial plan. The same thing applies when we're talking about rental properties. You have to manage cash flow. You're buying an investment property for a return. So you might not be able to have every single coverage, everything, cream of the crop across the board because you're balancing cash flow and return on that property. You simply need to understand what you have so that you can plan accordingly or make the appropriate choices that are going to be in the best interest of you and your investment property.
So Brian, if I'm trying to keep my premium down, so I choose lesser coverage, that's fine. I just need to have more cash on the sidelines to deploy if needed. And if I want to have that consistency and in my monthly payments and not have to keep all that cash on the sideline, then I choose a little bit better coverage so that I don't have to have such a large sinking fund. Is that fair?
Agreed. It's certainly a trade-off. Yep.
Got it.
So with that, Derek, it is 12. I'm going to say it's 12:25 to keep our 25-minute streak alive. It's 12:27, so we owe you 2 minutes back. But we want to first say thank you to everyone that is on this workshop with us today. Our entire team is very grateful to have you with us, to be working with you, and to have some of your time today on this Thursday. So thanks for being with us. Thanks for your attention. Thanks most of all for your trust and for being part of our agency. We're going to hang out now for any questions, any feedback, any commentary. We're happy to chat. So feel free to hang on this call and unmute yourself or use the chat feature within Zoom. We'd love to talk more specifically and answer your questions while we're here. But with that, thanks again for joining us. We certainly appreciate you.
Thanks, everyone. Have a great afternoon. Brian, we've got one question from the chat already, and it says, if a landlord can't say no to an emotional support animal and that animal is an aggressive dog breed, does that change what kind of coverage you need? Does it change it? I would say probably not. I would say it's maybe going to be a little bit more challenging to obtain the amount of coverage that you need. We take a pretty high level approach to how much liability coverage somebody should have. We're typically using the same coverage amount on the auto insurance versus the homeowner's insurance, the boat insurance, the rental property insurance, because in our mind, you as a person have a certain amount of future income, you have a certain amount of investments and savings and equity in your home, and we think that that needs to be protected, whether it's a swimming pool with a diving board that someone might get hurt on, or it's an auto accident that someone is suing you. In all of those instances, your income and your assets, they're identical and they're always going to be at risk in that lawsuit. So I don't necessarily think that a tenant having that dog should really change how someone decides how much liability coverage they need. It might make you think a little bit harder about it, but the aggressive dog breed, the pit bull, the Doberman, the Chow, those types of things, although obviously not all of them, and most of them are wonderful dogs, not all of them are problems, but insurance companies do ask a lot of questions if you have tenants that are going to own dogs like that, just like they ask them, if you have them in your own house.
Yep, that's a great question. Great question. What else is out there that we can touch on? There's another question here. Looks like it's about I think this is about a detached garage. Correct me if I'm missing the boat here. But when calculating the value, the insurance value for your investment property, if the garage is attached, that portion is going to be included with the home. If the garage is detached, there's going to be a separate coverage designated for that detached garage. Generally, that's going to be 10% of the coverage amount on the home. Works very, very similar to the way a traditional homeowner's policy works, where you have coverage for the home and any structures that are attached. Anything that's detached would fall into a separate coverage section. Good question.
Brian, I got a direct question here. It's about the furnishings in the home. And that's a great question. A lot of landlords don't furnish the home, but certain ones do. And most rental properties, the insurance policy for them is going to provide very, very limited coverage for the furnishings within the home. Maybe it's the refrigerator, the washer, dryer, maybe it's some furniture or some kitchenware. So if you have those types of things, be sure to address those with your insurance agent, because most policies are going to be very, very limited with regard to the coverage they provide for those furnishings within the home.
Yeah, and you can get coverage. It's just not going to come as a standard piece of the puzzle on that insurance policy. Very easy to secure coverage for that stuff, but it's not going to be provided automatically, at least not at any sort of substantial coverage amount. Good question. Yeah.
And Craig asked another question. If I moved my properties to an LLC, would that disqualify me from a multi-policy discount? In most cases, no, as long as one of the members of that LLC qualifies for that multi-policy discount, that's going to apply to that rental property as well, even though that home is deeded to an LLC and the LLC is listed on its insurance policy. If the member of the LLC has those other policies with that same insurance company, the multi-policy discount is typically going to apply.
Yep. Great question. Yep.
You want to take the next one, Brian, about tenants having renters insurance and whether you should require them to do so?
Yeah, absolutely. So requiring tenants to have renters insurance, pretty popular kind of change in the landlord world. You didn't used to see that as frequently, maybe 5 or 10 years ago. Today, many landlords require that their tenants have renters insurance in place. Couple of reasons for that. Number one, the owner, you of the home, your insurance is not going to provide any coverage for your tenant's stuff. So if there's a burst pipe, if there's a fire, if something goes wrong, those tenants are on their own in terms of replacing their stuff. They might have $15,000 worth of furniture and clothes and electronics that they keep in your home. Your policy does nothing for them. So they need to have their own renter's insurance to provide that coverage. When that claim happens, their renter's insurance is also going to pay for alternative living expenses. So it's going to pay to put them up somewhere else temporarily while your home is cleaned up and repaired so that you can get those tenants back in it. Beyond that, their renter's insurance is going to have liability coverage within it. So when something goes wrong and it's the tenant's fault, there's going to be liability coverage in place, likely stepping in before that lawsuit really lands on your plate. To go with that, say they're up late at night smoking a cigarette, forget to put the cigarette out, or they light a candle and don't put the candle out. If they cause damage to your home, they would be liable for that, and their renter's insurance liability coverage is going to pay for those repairs to your home if they were to be found as the ones who caused the damage. So there's a lot of benefit to the owner, to the landlord, by having tenants who do have renter's insurance in place. Part of the benefit is, yes, for the tenants, but there is some benefit to the landlord as well.
And I think that's a great answer, Brian. I think it's important to point out as well that if that tenant, puts the cigarette out and it causes a fire, or they tip over that candle that causes a fire, and even if they don't have renter's insurance, your landlord policy is still going to provide coverage for the repairs to your home. Now, let's say you decided to opt for no insurance policy on your rental home because you didn't have a mortgage and it wasn't required and you just like rolling the dice, right? Then you certainly want to have a requirement that your tenants have renter's insurance, because now when they cause that damage to your home, well, they're liable for it, but what happens if they only have $500 to their name? Well, you're going to be paying out of pocket for all those repairs to your home. If they have renter's insurance, you're able to sue them, know that that renter's policy is in place, and the liability coverage on that renter's policy is going to pay for the repairs to your home up to whatever coverage amount they chose. So that portion of it is extremely important with regard to a rental property if you were someone that chose to forego insurance. Brian, next question. What if your tenant damages the central air? The dog damaged the central air. That is a really good question. I know that damage to your own home, your owner-occupied home caused by your own dog is not covered on a standard homeowner's policy. Brian, are you familiar with how that plays out on a landlord policy?
I am not. I would want to think that it would follow the structure of the traditional homeowner's policy, but because it's not your animal, that's a great question. We'll have to follow up on that. Have not run into that yet, thankfully, but not certain exactly how that would play out. We can certainly find that out, though.
Well, we'll get back to you on that, Renee. Is there a minimum liability coverage that should be included on the renter's insurance if you require your tenants to have it? Make them have $500,000 or more. It costs next to nothing to have that coverage. A lot of apartment complexes will say we require $100,000 of liability coverage. I have no idea why. The difference between $100,000 and $500,000 is probably $5 a year. In some instances, you can go up to $1 million. It's probably another $5 a year to do that. So make them have at least $500,000 of liability coverage if you're requiring it.
Yeah, absolutely.
Cool.
All right. Well, does that do it, Derek?
I think so. I think let's wrap it up and let everyone get on with their day.
All right, very good. Well, thanks again for everyone joining us. Thanks for your interaction and the questions and the commentary here. We appreciate being together with you today. And of course, we are here as a team to help anything that you need. Your friends, your colleagues, your neighbors, we're here for you and we're here for them. So glad to connect with anyone who could use the help. Have a great day.